Did you know there are smart, legal strategies you can use to potentially minimize your taxes all the way down to zero? Sounds incredible, right? Well, in today's video, I'm breaking down exactly how you can take advantage of these proven tax-saving techniques to keep more of your hard-earned money. But before we dive in, make sure to check out the video description below after watching. I've included some valuable resources, tools, and guides to help you continue your journey to smarter tax planning and financial success. Now, let's get into it. First things first, there's a difference between illegal tax evasion and smart tax minimization. Tax evasion can land you in serious trouble, but tax minimization? That's perfectly legal and encouraged by the tax code. Today's strategies are about minimizing your taxes using legal methods and tax incentives designed to help you. Let's start with deductions. A deduction reduces your taxable income, which means you pay less tax. Are you taking advantage of every deduction you're entitled to? Home office deductions, educational expenses, and charitable contributions are just the beginning. For business owners, this can mean deducting expenses like supplies, travel, and even part of your mortgage or rent if you work from home. Unlike deductions, which reduce your taxable income, tax credits reduce your tax bill directly. They're like free money from the government. Common credits include the Earned Income Tax Credit, Child Tax Credit, and Education Credits. Be sure to check if you qualify because these credits can take thousands off your tax bill, sometimes eliminating it completely. If you're self-employed or run a business, choosing the right business structure can make a massive difference in how much tax you pay. For example, switching to an LLC or S-Corp can open up more opportunities for deductions and even reduce your self-employment tax. Plus, it can provide legal protections. Deferring income can be a powerful strategy for reducing taxes in the current year. If you're expecting to be in a lower tax bracket next year, it might make sense to push income to that year. Similarly, capital gains can often be deferred, helping you spread out your tax burden. Finally, tax-deferred and tax-free accounts are your best friends when it comes to minimizing taxes. Contributions to a Roth IRA or health savings account can grow tax-free, and if you're putting money into a 401k or traditional IRA, that's money you don't pay taxes on until you withdraw it. Before you implement any of these strategies, remember that tax planning is personal. What works for one person may not work for another, so it's always best to consult with a qualified tax professional to find out which strategies apply to you. Before you implement any of these strategies, remember that tax planning is personal. What works for one person may not work for another, so it's always best to consult with a qualified tax professional to find out which strategies apply to you.